Welcome to TradeTheMBI.com. This is John. This reports for the 31st of October, ending the month. Yesterday we were up huge, and I was like, based on those readings, it doesn't look like it's going to hold it. The only benefit would be a push up of the steel here, which would be an indication, along with the rejection where you're heading lower with orange, that spread increasing would be bullish. But yeah, we ended up lower, so no shock with there. And then realizing that and recognizing it, Trump's changed his tune. Now the war is going to end without freeing the Strait of Hormuz or anything else, because the calculus of trying to put boots on the ground in Iran is insane. It makes no sense whatsoever. How you negotiate the finish of that and whether the Iranians make their demands, that's a whole separate issue. You claim that you destroyed all this, that, and the other, but you basically gave them oil that's going to allow them to buy all new equipment and much, more advanced stuff starting over. So, and you're giving them a price of oil that's more than double, so it makes it easy to pay for. Um, I guess you could cripple their production, but I don't know how that helps you in any way, shape, or form. But so this is going to prove to be just generally a disaster. I think probably it's the best case for it. From an NQ standpoint, you can see we're below the 7.5, so that tends to get towards that area where typically when you're making new lows, you start to think cover, particularly if you get magenta back over yellow. It's starting to do that, but still in a decline mode of that. But right there, the extreme histogram moving from the negative into the green area tends to have a little bit more strength to it, but you've got to see a basing effect. We'll see if the latest rhetoric about him talking about, willing to end the war like this has much to do with anything. You're still, look at this, West Texas at 102. So fine, you were over 104. The market's not buying the hyperbole. You're already seeing it in the supply disruption among, the UAE and all these other places that just don't have anything because they haven't been able to get ships transiting. And yeah, this was never a benefit to anyone having oil at these levels. And, they started to look at the political impetus, losing 50, 60 plus or more seats in the House and even in the Senate, losing a lot more if they continued this. Uh, it was a fool's errand, so whatever. But, decimation for the euro from that standpoint, we're back to the lows. We should have spiked from the lows anyway. And it should continue because the reality is this doesn't end for the rest of the world anytime soon. It's going to continue to build. And you're going to see strong support here for gold in that, as you're going to end up with potential for a global recession now. Um, Juxtaposed to the idea of the higher costs. So, will those costs translate into inflation, or will they translate into just shutdowns of economies, or at least reduced productions? That's probably more likely than the inflation, because it just after the last round of inflation, it just isn't likely that people can sustain. Economic activity with the higher prices, in which case things start to deteriorate rather quickly. And I think that's likely to what we're going to see. Just depends where, you're kind of at that tipping point now. We talked about this a couple of weeks ago, that this would be around that range where it would start to become evident. And they want to think about 5 more weeks is not doable. It's not. So, yeah, that definitely is going to cause a problem. Beautiful baseline here for Bitcoin. So your crypto has reached this point where it's like, okay, nobody really wants to get rid of it below this, um, but they're also not excited about adding anything into it. Um, that becomes, your version of a quasi support. You can see from a DOC reading, as well as MBI. Not a whole lot of excitement there. You get the short-term buyer push-up. That could be enough to move you back over the 23% in this case, but you still don't have your orange coming down to give you a full turnaround buy configuration. And this becomes the general problem. We look at it from a 50K. Um, as we were talking about before, those spikes coming through. As soon as it finished, and you had your orange coming through green at that particular stage, you really need a continuation of red rising and that to take over and become the lead on that, and it just basically flattened out. And as soon as it flattened out, that was the softest that was seen in price, right at the 38%. So once you saw this pivot right here below the 25 is over. You're going to zero. You don't have to think about it. You don't have to cry, moan, or whatever. Even if it does it a couple more times, you're still going to zero. And guess what? We went to zero. That's simple. Double pow wow here with the orange below green, double whammy, and then the crossover. Now we're reaching the point where this run up early on could be right at the edge of its peak run where it may have to move across sideways a little bit or whatever. But you get a strong turnaround of DOC red, and then so as long as that's continuing to rise and you're at peak magenta over this 33 level, and that it has the potential to sustain itself a little bit more. We look at it from the early morning yesterday. It was very funny because we had that nice run up looking beautiful, and then it started to get a little wonky. We ended up with some extreme spreads, and so this is what we were talking about before, where you see the move. So in this case, green over cyan, so that's bullish from that one. Huge expansion, but then boom, you reach a maximum in that spread range. And if I slide that up so you can see it, so green at 19 and cyan minus 11, that's 30 points. Not a whole lot of room left. And sure enough, from that, you get a contraction going back in. Well, and then orange spikes from that one. So you end up with the reversal there, where that becomes the bearish. This becomes the bullish as the orange coming back down and steel coming up. And that led up to a nice little return. And then you ended up with green back over. So continued to work until you got to classic DOC spread again. Pretty big range. And this time, though, that cyan spread to green and red was large enough that that drove the negative move. Filled back positive extremes weren't even until right here, so that really didn't cause any headaches as far as the retrace goes, but pretty clean from there. And then you can see all the different. I gotta grab price right there as we slide across. So in this range, where we ended up with pretty much just a narrowing of the spread range in the DOC, orange caught between it. So continuation of what? Well, continuation of sideways. That's what we ended up with until we finally got a little bit of a breakout that pushed us into some extreme ranges. And then we started getting just that beautiful play back and forth. We're continuing to do the same thing. And you can see here, when you're below 23%, you get your magenta spike, and that over the 33 starts to fade with MBI white leading. You're just going to be making a series of new lows. It's not even something to debate. And you can look at those ranges. The spread of that shows how broadly the disdain was for the idea of moving in a positive direction. And when it started, it was short-lived, and you had the orange popping back up above, and the spread returning again pretty quickly after that, and that began to accelerate too. And then, as usual, right at the end of the day, option guys coming back through there, flipping everyone who was at long and their puts. And they got turned around, and that's the beauty of it. And then you can see here they're just clearing out all of those because people weren't buying calls at this point because they thought everything was going to hell in a handbasket. Trump makes a few comments. All those people who bought calls at the end of the day are going to be very happy at the open. And well, this is what it is from the program adjustment where it sees it, and pretty straightforward from there. The green turnaround to the slight fade going back up, and now current fade there. But all these little up configurations are just that orange move. And then you get the crossover foliage. And what this really reflects for the most part, going into the darker gray, and that is that conversion. And so next I'll be converting those into the actual buy configuration. So you'll end up with your buy signal very early there and a very quick run. But it'll be based on the zones of the Morganacci lines, because then we can treat each of these signal configurations specific to um, regional area within the Morganacci, because once you get over the 38% threshold in that, you start to get a different reaction from DOC consolidations and then the spreads as well. So it changes things a little bit. But, we got Easter coming up here, so that's going to have the market closed for Friday and that. So, anyway, that's the long and the short of it. Just thought I'd throw that out. Indicators, obviously, for next month ready to go out, and we'll be out a little bit later today. Anyway, have a good one. Trade well. We'll talk later.